Imagine signing your tax return in just 5 minutes, just following the sticky notes to the signature lines and seeing an expected refund of about $21,000. It feels exciting, right? Until months later, the CRA reviews it and the court finds that the $333,000 loss behind the refund never even existed. That's what happened in Robert Fransen versus the King. It's a 2023 Tax Code of Canada case. Hi, I'm Amandeep Singh from Cloriver CPAs in Burnaby. This story comes from a publicly available Tax Code of Canada decision and shows how small oversights can turn into serious tax consequences. Mr. Fransen was a construction electrician. For 2009, his return showed a net business loss of $333,000, even though he was not operating a business. That single entry wiped out his taxes for 2009 and even tried to create refunds for 3 prior years. He had used a tax service promoting scheme unusually large refunds through what it's called alternative strategies. The service charged a percentage-based fee linked to the refund amount. The paperwork looked professional and promised big results. Now, when the CRA examined the filing, the numbers did not make sense. The return contained made-up business income, a request to carry losses back to prior years, and several lines that repeated the same large amounts. And even though someone had been paid to prepare the return, the preparer's box was left blank, something that should never happen. During the audit, CRA asked for proof, bank records, invoices, or receipts. None were provided. Instead, the taxpayer passed CRA's letter to the preparer, who sent back vague responses. Eventually, CRA disallowed the loss and added a gross negligence penalty under subsection 163(2) of the Income Tax Act. When the matter reached the court, the reasoning was clear. The refund was far larger than any received before. The return referred to a business that did not exist. The preparer had avoided being identified, and the engagement papers themselves contained disclaimers saying the service was not offering professional tax advice. The court said that seeing such a large refund should have prompted a question. Is the refund too good to be true? Because he did not stop to ask and did not even review the return he signed. The court found that he was willfully blind, choosing not to look, and also grossly negligent. The appeal was dismissed and the penalty stood. There's an important takeaway here. In Canada, anyone can technically prepare a tax return. There's no formal licensing requirement. But once you sign, the CRA treats that return as your certification. So even if a preparer makes the mistake, the risk still falls on you. If a refund seems unusually large or the explanation doesn't make sense, pause. Ask questions and consider having a CPA review it before filing. A few minutes of checking can save years of stress. At Cloriver CPAs, that's what we help clients avoid. We focus on personal and corporate tax filings and provide CRA-compliant legal tax planning advisory that keeps everything transparent and defensible. Think of us as Google Maps for your tax journey, helping you find the clearest route before you file. Our team explains the reasoning behind every figure in plain language, verifies that key amounts are supported by documentation, and ensures your filing stands on solid ground. If you've received a CRA notice or simply want confidence before you file, let's review it together. A professional check today can prevent costly surprises later. I'm Amandeep Singh from Cloriver CPAs in Burnaby. If you want your next tax filing or plan to be smart, transparent, and CRA compliant, we are here to guide you professionally and in a timely way. Thanks for watching, and I'll see you in my next video. Until then, bye.